Sometimes it feels like the sun will never rise, like the birds will never sing again. Believe in a power greater than what you are going through. When you don't know what to do, keep breathing.
That's right. When you don't know what to do, just keep on breathing. From the City of Angels in Los Angeles, welcome to all my listeners out there in Radio Land. I'm Dave, the Caregiver's Caregiver, at caregiverdave.com, usually along with my lovely co-host and best-selling author, former mayor of Grover Beach, Central California, Debbie Peterson, but she's not here today. She's journeying to the Netherlands and to Iceland, and I'm a little bit jealous. But anyway, we are coming to you live and on demand 24/7 on numerous syndicated radio and podcast networks on 30 global audio and video platforms, including iHeartRadio and iTunes, YouTube, Spreaker, SoundCloud, Vimeo, Stitcher Radio, Spotify, CastBox, Mixcloud, and way too many more to mention. But in fact, we are proud and voted #1 caregiver podcast on FeedSpot out of thousands, and #1 caregiver podcast of the top 50 on Player FM. And we have an especially exciting show planned for you today. Frank Buchholtz. He retired after 40 years as a financial advisor, helping people build wealth as a trusted investment advisor. He finished his career at Merrill Lynch. Over those decades, Frank navigated bull markets, crashes, and everything in between, guiding clients through it all. And when he retired, his own IRA had grown to over $8.5 million. Not because of luck, but because of a steady, proven strategy anyone can follow. Now he shares the same time-tested techniques to help others take control of their financial future and retire with confidence. Before we get started, I do want to take this time and thank my last week's guest, Charlie Siegel. And if you need inspiration, best-selling author Charlie Siegel shares his soulful poetry to help you heal, hope, and shine again. Just a reminder, you can watch or listen to that interview and all our interviews, including this one, at caregiverdave.com or any of our other 30 global audio and video platforms that I mentioned earlier. All right, enough of that. Frank, so great to have you on the Caregiver Dave radio show.
Thank you, Dave, for having me. I appreciate it very much. Thank you.
And I appreciate you coming in at the last minute. We had a cancellation. And as your mentor probably told you, when they call, you say yes, no matter what.
Absolutely.
So I appreciate that. Thank you. That's what they taught me anyway. I always like to ask my guests, just who is Frank Buchholtz and why was he placed on this earth?
Well, basically, the bottom line is the fact that, I was placed on this earth, I think, really to help people. I gave a speech at Toastmasters way back in the day, right, before I was even married. So that's over 45 years ago by now. And my speech centered around the fact of helping people. And not that I'm some guru, some genius, but I think if we can help people, whether it's, through monetary or investing or what have you, I think that this goes a long way. So I believe I was placed on this earth to help people. And that's basically who I am. And I never stopped helping people, even when I retired. I wrote the book because of my goal to help people and help them invest properly and to get the maximum potential return on their investments.
All right, great answer. Now, let me ask you, first of all, the stock market has changed over the years, hasn't it? You've been in this for decades. And I know I've lost a lot of money in the stock market. And I've come to the conclusion it's a rigged casino game. What's your take on that?
I can see why people say that. Bottom line, of course, is that if you venture into the stock market and you just do it by yourself and you're kind of going by gut instincts, if you will, and, I'm going to buy Amazon because of whatever, or I'm going to buy Costco because of whatever, I think it's fraught with peril. I think the only way to really approach the stock market, unless you have a great interest, it's your hobby, and you're very adept and very smart, is to have a managed account. And a managed account takes the form of either a mutual fund, a managed exchange traded fund, or a outside money manager that actually buys and sells securities for you on your behalf. Because that's what they do for a living. They're at it, 40, 50, 60 hours a week. And there's typically no way that the average investor can compete with these guys. Mm-hmm. And you're liable to make all kinds of mistakes along the way. And even then, it's not a guarantee you're going to succeed every year, but it increases your odds substantially. And given the fact that returns in the stock market have been on average 10% since God knows when, pretty much way back when, that is the best way to play it as I see it.
Yeah. I've done it all. I've gotten the computer and gotten the software and just went at it. And I've realized that I would have just bought these good stocks that I own and just not touched them for years. I would have been better off than trying to time the market and buy and sell and do all of that. And through the booms and the crashes.
No question.
You find that a buy and hold strategy still works or not really today? It depends on what you own.
Absolutely. But remember, in general, though, it's time in the market versus timing the market. Mm-hmm. People are trying to time the market. It's not going to work. So I'm a firm believer in buying and holding. But again, it's all about buying quality right up front. To buy Amazon way back in the day, of course, that was kind of scary because most of the pundits were saying Amazon wasn't going to make it. All they do is sell books and
Amazon was like Bitcoin today, right?
Yeah, exactly. Exactly. So kind of similar to that. Of course, I'm not necessarily fond of Bitcoin either, but we'll see. Maybe the proof's in the pudding. But bottom line, of course, is that if you buy quality stocks through a person that knows what they're doing, and they can guide you and they can sell when they need to, etc., I think it can increase your odds dramatically, and you're more likely to get a good, healthy return. But don't run for the door. Right. People that ran for the door in March of 2020, they shot themselves in the foot because, believe it or not, at the end of the year, as you might recall, the market goes up in 2020, even though of COVID. So, you got to hang in there through thick and thin.
Yeah, I bought some gold a while back and some Bitcoin a while back, and I just didn't touch it. And I saw Bitcoin go up to 65,000 and crash down to 19,000. I didn't do nothing. and so my Bitcoin has tripled in value. My gold has doubled in value. So I'm a firm believer is don't let your emotions mess with you, right?
That's right. You got to stick with it. Have courage. Yep, no question.
So you spent 40 years helping people as financial advisor. What was the moment you realized that work was more than a career?
I realized it fairly early on. Having said that, it wasn't the minute I walked through the door. When you start as a financial advisor, it's, to be blunt with you and maybe a little bit overly candid, but it's about survival because most financial advisors don't make it. Right. It's a very tough job and a very tenuous job, and you have to acquire clients in order to succeed, obviously. But all the clients out there, potential ones, are already dealing with another financial advisor of some flavor, typically.
Yeah, they come and go. In the boom times, they're a dime a dozen.
Yes, absolutely. No, it's a tough business, to put it mildly. And I'm not saying that I'm the smartest kid in the room, but I mean, it's a tough business. So, but once I kind of got established, then of course, you realize early on that, if you help people, it rewards you tenfold coming back the other direction. So that was probably about, 4 or 5 years into it. And of course, I kind of kept that mantra all the way through. And I always tell clients, you can ask me anything you want about the investment world, and you'll get a real blunt, truthful, honest answer. And I think that really helped me because people could ask me anything about, how do you get paid or whatever. And I think that it helped me throughout my career substantially.
Yeah, well, a lot of caregivers are broke and they have jobs. They might have some savings, but what does it take to retire these days? Let's say if you're in your 40s or 50s or 60s, or God forbid in your 70s, and you're still not retired yet. What is the best strategy to get? Because you're not going to get those 10% returns on a lot of things. And
for sure.
The shorter it is, the higher return you need, right? So some scenarios on some caregivers who are listening and wondering if they're ever going to retire and at least enough to pay their bills,
Yeah. I think the bottom line, of course, is that you need to probably shoot for at least $1.5 million if you can. And in my book, I talk about what I call the Starbucks strategy, meaning that if you can take $5,000, buy the exchange traded fund ticker symbol SPY, which mirrors the Standard & Poor's 500 index, and you start with $5,000, and then of course, rather than having 2 cups of Starbucks every day, take that $10 and add it to that portfolio. And if history repeats itself, and you do that for 35 years, you'd have $1,300,000. So, and of course, what you could do, of course, is try and increase that $10 a day over time, because you're theoretically probably making maybe a little more money as time goes forward, God willing. So that gives you some flavor. And in the book, I talk about my book, the Investor's Golden Playbook. I do have the link, of course, to a website that allows you to calculate how much you'd earn if you started with X and you had so much money per month. So it's a very useful tool to have.
Well, I know you like to help people because you said so.
That's right. That's right.
You're in your 70s, right? And I assume
73.
I assume it's time to retire, or maybe you did retire, but
I did retire at the end of 2021.
Down. Most people start downsizing. What made you feel compelled to write a book and to do what you're doing now?
Well, candidly, I've been very blessed and I've been very fortunate. And for most people, the house is their biggest asset. Well, in my case, my wife and my case, our house is our fourth biggest asset. So that comes after my deferred comp account, my IRA account, and my trust account. So I've been very fortunate financial-wise. And when we retired, we do not have any financial worries. So I kind of thought to myself, maybe I can share that knowledge with other people in America, maybe even the world, if you will, because a lot of what I talk about, of course, is universal. So my thinking was, why not give back that knowledge that I've earned over 40 years and learned and kind of learned the hard way, if you will.
Yeah.
So, and I think that I succeeded in doing that. I think I helped admirably. And then, of course, the other thing is that when you retire, you want a sense of purpose. Well, writing the book gave me a sense of purpose and then some. Let me tell you, writing a book is not for the faint of heart. So, but it's been very, very, very rewarding, to be honest with you. Very rewarding.
Well, in 2008, it was a rough time. I was invested in all the wrong things, and my entire life savings just evaporated. And I didn't think I would ever recover. But 15 years later, I have recovered through a series of different things, my business, and had some legal advice of how to manipulate things. How did you survive 2008? And what do you recommend for people who didn't recover like me? I know a lot of people who went through the same thing I went through, and they're not recovered yet. Yeah,
it was a tough one. I mean, it was the most brutal time of my career, and I've had some tough challenges, if you will. When I saw Bank of America, the company I worked for, go from $50 a share to $3 a share, I thought, oh my God, here we go off the cliff, right? And of course, then I thought, B of A goes off the cliff, my deferred comp goes off the cliff. And then I thought, well, if B of A goes off the cliff, the whole world goes off the cliff, because you're going to have a major financial institutions like B of A go off the cliff, if you will. Bottom line, of course, is that we were told by management, and they were correct, and I agree with them 100%, to encourage your clients to hang in there, to stick with it, and not run for the door. And in my own case, in my IRA, my 401k, which became my IRA when I retired, I continued to invest. And believe you me, I was scared to death. And I had many a sleepless night. Trust me on that one. Many a sleepless night. But I kept thinking that, America's been through tough times before, and I firmly believe we'll get through this. And, by the grace of God, we did get through it.
You were in your 50s in 2008, right?
That was 2008, yeah.
Yes, so you were in a bit of time.
It was a rough time. Now, having said that, in your case, it's hard to kind of start over again when you kind of fell off the cliff, if you will. It's really difficult. The only thing you really do, of course, is to kind of go back to square one and keep on investing if you want to. And if you sold, you locked in the losses, which, of course, is kind of a tragedy, to put it politely. But you got to kind of keep going somehow and keep trying to kind of regroup and kind of start over again, if you will. So it's not easy, believe me. It's not easy. It's very, very scary.
Well, I was very fortunate. I owned a gas station lease and tried to buy the real estate for 30 years, and the oil companies just weren't selling. And after I lost everything, I had a partner, and we were able to buy the real estate, and that changed everything.
Sure.
Of course, my credit was shot. I couldn't buy it, but she bought it, and we did an agreement where, after my credit got better, I could become a partner again, and an option. And so it really turned out. And the gas station, selling the gas station last year, this was the goose that laid the golden egg, and I'm so grateful for that. But a lot of people don't have a business.
Thank God for that.
Buying that.
Yeah.
I do have some
Yeah.
real estate, and at one time in 2008, my real estate was upside down, but now it's looking pretty good. So you got to be diversified, right? I also
Yep.
own some gold and silver and Bitcoin. Talk about diversification.
Diversification, of course, is important. I mean, in my case, basically, we have three asset classes in our household. We have our personal residence, we have stocks, and we have bonds, and that's pretty much it. We don't really have a lot of diversification in terms of outside real estate, if you will, or Bitcoin, or gold, if you will. My thinking, of course, is to be diversified in securities, and then, of course, we have the house, which we paid for probably 20 years ago by now, thank God.
Yeah.
So, but bottom line, of course, you do have to diversify, particularly if you're buying stocks. You want to have a lot of different types of stocks, different asset classes, large cap, mid cap, small cap, whatever. The capitalization, of course, is based upon how big they are, et cetera. Maybe some dividend growing stocks, maybe some, technology stocks, but you want to have a diversified portfolio. That's easy to achieve through managed accounts, of course, or through exchange traded funds or even mutual funds. So you want to be diversified, period. If you own one stock, you could shoot yourself in the foot, no question, because if that stock falls off a cliff, then you've got a problem. So you got to be diversified, and I highly recommend that for all investors.
As we speak today, S&P 500 all-time high,
Yep.
gold all-time high. How much? I mean, is it a bubble? Is it over bought? How do you manage? How do you tell? Because with the inflation and with the dollar and with all these things, is real estate overvalued? Is the stock market overvalued? I mean, how do you really gauge that stuff?
Yeah, it's really hard to gauge. I think the bottom line to it, of course, is the fact that some people will say, well, it's overvalued, I'm going to wait. Well, I never had a client who waited who benefited by waiting. I think the bottom line is if you really kind of inclined to invest, you don't necessarily have to dump in a ton of money at one time. You can what they call dollar cost average.
Right.
And you add so much money every month on a disciplined approach. Having said that, though, I firmly believe that given the amount of innovation is taking place in America and the world today, I believe there's going to be opportunities well into the future. And I firmly believe that with the ever-increasing population base we have across the globe, that you're going to see the stock market to continue to appreciate over time. Now, it may be less than it's been in the past, or maybe more than it's been in the past, but I firmly believe you'll see some appreciation. And just because it's kind of high right now, to put it mildly, I don't think it's necessarily a negative situation at all.
What are the PE ratios looking like?
The PE ratios are pretty high right now, no question. But again, a lot of the pundits right now are expecting earnings to grow substantially in this next quarter reporting.
Are we in a good environment with Trump? Is he doing some good stuff to help business?
Well, a lot of the pundits think this quote unquote beautiful bill is going to be helpful. So we'll see. I mean, of course, to remember, one of the key components of the bill, of course, is to extend the tax cuts he initiated in his first presidency, and to have the tax increases take place. I think that could be negative, because last time it did seem to help the economy substantially. So, sometimes when you have a lower rate on something, whether it's the price of apples or tax rates, sometimes you get more and more in the long run. So I think that's what we're kind of counting on. Now we'll see if that takes place again, but you never know. So, but I think to raise taxes right now could be kind of challenging to put mildly or keep the taxes where they are, to keep it challenging to the economy.
Yeah. Well, let's talk about your book. You talk about the attributes of the affluent. Can you share what you mean by that?
Oh, absolutely. So, I tried to. My goal was to try to give the reader every bit of knowledge I've learned over the last 40 years. And I mean, and of course, I would rack my brains out at night. How do I draw the knowledge out of my brain and put it on a piece of paper that makes sense and is interesting for the reader? So that included, of course, the attributes of the affluent. And one of the most, I think, telling attributes of the affluent, of course, was the fact that they are visionary. They kind of look into the future and see things that other people aren't seeing. And I think that people can take that concept of visionary, not so much necessarily for to start a business, but just also to look at their own situation. Where am I going to be 10 years from now? Where am I going to be 20 years from now? Where am I going to be 30 years from now? I think they can benefit from that dramatically. Other attributes, of course, I think are courage. You know, I had to have courage myself dealing with the stock market because I was heavily invested in the stock market. And of course, believing me, it was, you know, my 401k became my 1.8k in 2008 and 9. So it was a bit challenging to put it mildly, but you have to have courage to hang in there and gut it out, if you will. And then, of course, the other attribute of the affluent I've noticed is the fact that they are typically very generous and they're very willing to contribute to worthy causes. They're very charitably inclined. And if you notice the Bill Gates of the world, the Warren Buffetts of the world, they are very charitably inclined, even though these people are, you know, of the what I call the mega rich. They're certainly willing to give back and, you know, help other people and pull them up as well.
Yeah. Talk about your attitude of gratitude.
Yeah. So that, of course, would be one of my last chapter, and of course that's the chapter entitled "Gratitude is Golden." I believe that gratitude is one of those I almost call it a secret of life, if you will, not to get into kind of the weird parts of life, if you will, but I firmly believe that being grateful is extremely important. It's good for your soul. I think it helps multiply and improve what you already have. And I think that it helps your mind, it helps your soul. It's a very, very positive attribute of people that are affluent, and people even a low run can certainly do that, because no matter who you are in this world, you have something to be grateful for.
That's
for sure.
Yeah. So you've worked with clients one-on-one, and now you're reaching the masses, shall we say? What's been the most surprising or touching feeling that you've received since publishing the book? What kind of feedback you get?
I think the one thing that's, of course, been about my book, of course, is the fact that it's been very gratifying, has been the fact that I've heard over and over again, I wish I had this book when I was younger. I've heard that over and over and over and over again by now. And the book was really written for, you know, people in their from 25 to 45, to try and get these people on board, to have them realize that if they start now with not a ton of money, they can actually grow their money to have a nice retirement and not be worried about money at retirement. The problem with America today is that half of people in America today retire with no money. So, you know, that's kind of a tough retirement, if you will. You know, all you're living off is Social Security. That's kind of a tough nut, if you will, given what everything costs these days. So, you know, but I think that the bottom line is I'm trying to reach these people, pull them by the hand, and lead them to the promised land.
What would our Social Security checks look like if the government took that money in the Social Security Trust Fund and invested it in a strategy that you're talking about? You think they'd be retiring in better shape?
No, in my mind, no question. Now, that's assuming, of course, past results, of course, would be the same in the future of that 10% on average per year. But I'm convinced that if I had taken that same money from Social Security and invested in the stock market all these years, I think my Social Security checks would be triple what they are right now.
Me too. So why can't they do that? I mean, is it just
it's a real political hot potato. It's a hot potato. And of course, I can just hear the politicians now, both sides of the aisle. The stock market, blah 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 blah. You know, and oh my God, it's risky, and blah 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 blah. Well, to my way of thinking, what they should do is allow the person to make the choice. Here's your guaranteed amount. Here's your potential. You know. Potential, of course, could be, you know, anything, any dollar amount, pretty much. But I think they should give that person a choice.
Well, you retired with $8.5 million. Good for you. Can you talk about some clients that you helped as good as you, or close to as good as you? Yeah, so that's a good question. Bottom line, of course, is the fact that I had a medical foundation that I highlight in my book, and when I inherited the account way back when, because of the merger with Bank of America and Security Pacific Bank way back when, the account was probably, you know, maybe $5-6 million, et cetera, and they were invested strictly in bonds, which were earning more or less 7%. And as time went on, the account grew, but not by much, because a foundation account
is required by law to give away 5% of the principal every year. So your growth amount is pretty minimal. Now, there was a gentleman from Pennsylvania I worked with, and he was gung-ho on investing in the stock market, as was I, and we provided him with a proposal which included our money managers that were working with people in New York, and they went down that path, if you will. And the account began to grow, and my thinking was, okay, gentlemen, let's set a goal of $10 million. And over time, we reached that goal of $10 million, and today the account's worth over $12 million. And the beauty is the fact that even though they're giving away 5% a year, we still got a fair amount of growth out of the account principal value by virtue of the fact we're investing in the stock market. Mm-hmm. And of course, is when I retired, they made me a trustee on the account, which of course, has been very gratifying because it's all about giving back. Yeah. Because they're providing, medical supplies to clinics around the world who offer their doctor services for free. So it's been very gratifying and helping people around the world in that way.
Frank, I can't believe how fast our time has gone today. Thanks so much for coming on the show.
Well, thank you, Dave. I appreciate it. Thank you so much.
How can listeners reach you if they want to ask some specific questions like?
Yeah, so they can reach me on
charge to run their accounts.
Yeah, they can reach me on my website is called investorsgoldenplaybook.com. And if they want to reach me via my cell phone, I'll give my cell phone number out. It's 714-206-2157. I'll be happy to help people, and my goal, of course, is to pull people over the finish line and be very affluent in retirement.
Thanks for coming on, Frank.
Thank you, Dave. It's been a pleasure.
And remember, everybody, all our live shows become recorded pod and video casts on your favorite platforms. My best-selling book, It's Your Life Too, How to Survive and Thrive as a Caregiver, is available wherever books are sold, and also on my free membership website, caregiverdave.com, where you can also schedule a free 30-minute initial coaching call about whatever you're struggling with. You can also join my community at Facebook, 34,000 followers at Caregiver Dave. Lots of tools, resources, this radio show, and much more. And if you click the like or follow button on whatever you're listening to this on right now, helps Google reach even more caregivers. Again, big thank you to all my listeners out there, to you, Frank, all over the world, tuning in every Wednesday and making us the #1 caregiver podcast on the internet. So until next week, same time, same channel, may God richly bless you all. Bye-bye.
Dave Nassaney, the Caregiver's Caregiver, has just released his 6th book entitled It's My Life Too, Thrive to Stay Alive as a Caregiver. It was specifically written for caregivers who know they should be putting their needs first, but just don't know how. Dave is the sole caregiver to his wife, Charlene, since 1996. He knows firsthand what caregivers are going through, because he is one. He now speaks all across the country, offering caregivers his amazing caregiver support package. Even the airlines tell us that in the event of an emergency, to put your oxygen mask on first, before you help your child with their mask. They know that those who don't heed their advice often black out, thus becoming unable to help either themselves or their child. And caregivers are exactly the same way. It's My Life Too, Thrive and Stay Alive as a Caregiver will help caregivers who are neglecting their sleep, diet, and social life and learn to put their needs first. Pick up your copy today or buy one for your special caregiver, on sale everywhere and at caregiverdave.com.
Sometimes it feels like the sun will never rise, like the birds will never sing.